What up, everybody? Welcome to the watch list of October 27th. But y'all notice not just a watch list, a whole lot of gems that we're going to talk about, especially in the first half of class. So I want to make sure you tune into that. I have some great um, technical analysis to go over real talk for, especially for my people who are interested in SMC. You're going to really like what we have to talk about today. But with that being said, let's really get into it. So this starts with last week. Last week, this is what the market looked like heading into Wednesday morning. And you might have seen on Wednesday morning that I put out some analysis to the free community. And if you're not in my free community and you're watching this on YouTube, the link is in the description right now for the free community. But this was literally the arrow that was drawn like this. I just drew this, said, this is what I expect to happen today. All right. And as you see, we've been in a range for quite some time. But before I even, you know, go here for a second, I do want to point out the fact that remember when price was around right here and I said I expect us to chop in this area right around here. This is what I mean by anticipating chop ahead of time. Y'all can see that this was hourly chop. This happens on all time frames, whether it's the 15-second, the 15-minute, the 2 hour, the 48 hour. It doesn't matter what chart you look at. The same thing happens on every time frame. So let me just explain why we knew it would chop in this area. So basically, price retraces here. Like you see, we made a lower low. Okay, we retrace into a bearish OB. This bearish OB right here. Look, see these green candles, these consecutive green candles? That's a bearish OB. All right, we retrace there. We make a very staggered move down, which is suspect. So that now brings confluence to, oh, that means that this discount basically could work because I talked about price staggering into POIs being a good indicator that we're going to end up using that POI. So staggering into this, it was really this one at the time. Excuse me, if you guys remember, it was this one because this is where we called it chop. Let's be really specific. We called it chop after this. All right, so it's basically you're reacting between two discount. You got a discount busy, you got a premium order block. That means there's mixed sentiment here. So usually that's where you see chop occur because there's two different valid views of the market right now, especially as we've been in a pretty consolidated time period overall. And so that's why when you see this reaction come, right now, if I'm a bull right now, I need to see a higher high happen immediately. You don't want to see price come up close to it and then come back to a discount. That's a bad sign. So let me reiterate real quick. Let me reiterate for a second. I want to make sure everybody's following me right now. It's very important. So look, if you're a bullish person, what you noticed is, oh, price just came to a discount busy. That means that after that, we want to see a higher high happen. What happens is a lower high gets formed in the market. That's a bad sign. Then price comes back down. That's terrible. You don't want to see that. Usually when you see that, it's like price ain't really ready to move aggressively to the upside. That doesn't mean we bearish necessarily, but you could see some chop occur in the market because after coming into a discount and then pop into the upside back into a premium, there is literally zero reason to go back down into a discount. Understand what I'm saying? So when you see us pop right here, cool. We need acceleration. We need continuation. We don't want to see price come back down. When you see price come back down here, bad sign. And mind you, remember, we're already in between this bearish OB and this discount busy. So all of this is why up. And this is why at this point, I was like, yeah, we got to consolidate in here for a while. And then lo and behold, you see we ended up consolidating in here. All right, for a good little minute. We stayed right in this range. You see what I'm saying, y'all? So this is how, and obviously this happens on all time frames, like I said. So when you start like understanding price delivery on a deeper level, you can start to anticipate when chop is expected to occur. And so that's how I knew that would happen. And then you guys watched for days. We just watched price stay here for a while, but we called it right here. So if you were playing it safe, you could say, hey, you know what? Since I know this is a bad area to trade, let me just stay out. Let me just stay out and wait for. I set price alerts on the outside of the range. So one price alert you could have had would have been right here. Just because we break a high doesn't mean that we about to go bullish. That's just where setups tend to occur. So if you caught the sweep here, if you took a sweep entry, meaning like as soon as price came above this high, you went short, you could have went short right here and caught the high of the freaking week. Easy. You know, you could have caught the high of the week. That's where setups occur, above and below consolidation. Or if you took the continuation, you could have caught this whole down move right here. This is the hourly chart, mind you, so this is good money. You could have caught the down move if you had price alerts on the bottom side of the consolidation. But the middle area inside of the consolidation, low probability price action, typically where people lose money. So just wanted to point that out for y'all as far as how you could trade and how to avoid rather low probability areas. Understand me? So all right, boom. So let's keep it going. So anyways, basically, let's get to the trades. So like I said, heading into Wednesday morning, this is what it looked like. This was the projection right here, like this. And where would I put the lower line for consolidation? So a question in the chat says, where would you put the lower line for consolidation? For me in this consolidation, I would have put it around here, the halfway point of this lower wick, because it's a long wick right here, right? That's an inefficiency. So I would put it right around the halfway line because I want to see how we trade at the halfway of that inefficiency, because I would know that once we start to lose that the 50% of that wick, then I know we're probably going to make a continuation to the downside right now. So then I would start watching lower time frames in that area for any type of a bearish PD array. I wonder if we could see, you know, I would start, wow, where's the yellow line? Look, perfect. So look, bearish PD array. This 5-minute SIBI right here would have been highly probable to take a trade on. Once we lost the yellow, all of a sudden this 5-minute SIBI would have gotten me the rest of the trade. You understand? So that's where I would personally put it. If I was gonna be like super conservative and just wait for the breaking of the range, that's my price alert. All right. Because I want to see basically the order flow heading into the break of the consolidation. So let me actually make another point about that while we here. My fault. So if I'm looking for price to break consolidation, I'm gonna put it at the low this time, not the halfway mark. I'm gonna put it at the low of that red wick, at the low of it. If I'm looking for us to break consolidation, I don't really want to see price, moving like this into the break. That's not it. That's not it. Typically, order flow is going to be moving pretty bearishly, meaning you're going to watch bearish PD arrays get traded to and respected. Or sometimes we form like a SIBI, like a bearish value gap, and we don't even revisit it. Those are all good signs of like, oh yeah, the order flow is really bearish right now, heading into the consolidation break. And so usually that would indicate a continuation. Plus, of course, main thing that I do is I look for the direction from the higher time frame, like the time frame above the consolidation. So for me, if you guys remember, I've been vocal about this SIBI from July 17th. All right, so me, although the market has been consolidating here for like 25 years right now, like I still see this as something that could potentially send Nasdaq to the downside. So for me, a time frame above the hourly right now that can tell me the true direction for price will be the daily. And this, to me, the daily has potential to go bearish from this exact area. You can see that it came right to the highs and it continues to reject it. So we'll see what ends up happening, but I'm getting some level of bias from a higher time frame than an hourly. Even if I check the 4-hour, I mean, it consolidated here too. So if anything, I would probably have to go to the daily, because the 4, you see the 4 is also in its own form of consolidation right there. One thing I would like is the fact that we swept these highs before this move down. So that would also give me some confluence to where we probably going to actually make a lower low this time. Because we already stopped out people who had stop losses on top of this red wick for me. So yeah, I hope that helped. But let's keep it going. All right, so now I showed you guys the projection. We're expecting the market to drop right now, heading into the opening of Wednesday's price action. All right, and if y'all can hear like sirens in the background, apologies, that's on the outside. So don't worry, I'm not about to get arrested or nothing. If y'all can hear that. Imagine they came in right now and just broke me, like, that'd be crazy. I'll let David finish the class if you want to hear. So look, so basically this is the 930 candle right here, 930, 931. Cool. I'm watching this on the 15-second. So this is what I liked about this. I like the fact that we ran over some highs. We made a strong move down with fair value gaps. Okay, here's what I didn't like for bearishness. For bearishness, we would not want to see a green candle coming right now. Now, there's a very specific reason for this that I won't speak about. But what I could tell you guys is that we want to see continuation lower. You don't want to come back into this range. So let me at least draw this. You see this little range right here we just left? You don't want to come back into that range right now if you're going to move lower. So when I see price do this, what I just do? Hold up. Why is it acting like that? Hold on. Am I bugging? Or maybe I'm not. Let me do this all the time. I don't know why it's doing that. They're acting weird. I don't know why TradingView is moving like that. Let me just start. This is Wednesday morning. Let's just start over replay and see if it could fix. Let's start Wednesday over and see if we get that fixed right here. Boom, boom. All right, we might be good. Yeah, let's see if we can make this point now. They're trying to stop us from being great, but we're not gonna let that happen. Oh, they acting funny, y'all. I ain't gonna lie, they acting real funny. I don't know why they not letting me play this 15-second. Maybe let's see the 30-second. Oh, maybe they're making me lose access to the 15-second because it's too many days now. It's like when I went over this on Friday. I guess. I don't know. That's my guess right now. If you guys know, TradingView only saves a certain amount of candles. 15 seconds is obviously a very small time frame. So, you know, a lot of candles has happened since then. They showed me the 30. I wanted to go over this at the 15 though. That's really annoying. I told you guys I plan for this on Friday, so it's cool. We gonna look at this on the 30. Hopefully I can still make the points I was trying to make. All right, so we don't want to come back to this range. We come back to this range. All right, cool. So with that, we should be bullish. We should be bullish. Now, this is similar to what I was talking about earlier. After this, we need to make a higher high. Seeing us go to a premium, back to a discount, we're about to chop. So do y'all peep that right now here at 932/33? I already know we're about to chop right here. For the same reasons I went over earlier, just the expectations of what typically happens when we're bullish as well as what happens when we're bearish. So let me reiterate, if we were bearish, you don't want price coming back into this range. So as we lost these lows, you don't want price coming back up into this range. That's a bad sign. But you know what? Cool. Maybe we're not bearish. Maybe we're bullish. So we need to make a higher high right now. So you see this green candle, we should make a higher high on the third candle. What do? Look at the red one. Came all the way back down to a discount. We about to chop right in this area. This is where on a micro time frame you can set price alerts. See how we move under those lows or slash over these highs. Simple. So right there, and the beauty about it is I was in contact with my mentees at the same time when this was going on, and they knew that chop was coming too. And that's my favorite part. Is like they understand it. So it's very helpful to know when chop is coming in the market because you could avoid conditions that look like this. Right? So people getting chopped up in here, you know, are we going high, we going lower, and it's just messing everybody up, but you just waiting for your moment. And this lasted for a whole half hour. Right? This is now a 958 candle right there. I'm still waiting for the break of a range. Cool. So now this entry here, and you see where I went short, and just to show you guys, this is where I went short at. See, 410. So this is all in the free community. I always send you guys stuff, and then we go over these plays that I send you guys basically once class comes. So that's my entry right there, which is this white line. So why did I enter where I entered at? The reason why I entered that is because we lost in consolidation. And if y'all paid attention to last week, I actually went over this entry with you guys. We lost the consolidation. The hourly, I already told you since pre-market that we're going down. So I have a higher time frame bias. My higher time frame bias is to the downside. We lost this consolidation right here. So do I go short immediately? No, not quite. Let me see what the next candle does. What's the next candle does? It's green. So I said, oh, all right, maybe it's not ready yet. It's a little fake out. That's straight. I'm cool. Now, if you paid attention to last week, what did I say? If we come back under the low we just made, we will continue if we're truly bearish, and price should not come back above these highs. All right, so that's why I went short there. Once I peeped us coming back to the down, I went short because I'm like, well, it's a low risk play. I'm literally risking a few points based on the setup I went over last week. You see, we never came back above the highs that we made. right there. And then so we expect continuation. And when we get that continuation, you see price just, you know, finds its way straight to the target. Easy money. All right. So this is the first liquidity target we had here, that yellow line. I don't know if I showed y'all that. Let me see. I meant to show you guys. So like what I did was all these lows right here become targets. You have a target right here. You have a target right here. You have a target right there. Okay, you have a target right here. So all these things become targets, all these lows on this choppy move up. And y'all should know the market never moves this way. If we expect it to continue, always expect a big sweeping of all of that to happen. I tell you guys that all the time. And y'all seen it happen last Wednesday. It was a crazy drop on Wednesday, was it not? I hope people made money on that. It was a lot of money that was made on Wednesday off of this crazy drop that hit the market. This is the 4 hour. Look at it from the hourly perspective. Yeah, I can see on the hourly, I can see money was made, right? On this drop. Absolutely. Big day. All right. Would I use the lowest body candle in this scenario? No, I would not use the lowest body in this scenario. There's specific places where you expect the lowest body reaction. I'll go over that deeper in the mentorship, but this is not one of those. This is, I'm actually looking, let me go back. I'm actually looking to take all these lows, all of them. I'm not looking for lowest body here. That doesn't mean you can't make money. At the end of the day, you're gonna still make money, but expectations is a lower low. All right, so where we at? Let's go back there. All right, so we got to a target. Anytime we get to any target, I'm watching my time frames closely. I'm gonna try the 15 one more time. Let's see if they bless. Let's see. Nah, they acting funny. I can't. They don't give me the 15-second right now. I'm sorry. I'm sick. I hope this looks, because remember, my analysis is gonna be based on the 15-second when it comes to my entries and my exits. So now I kind of have to do this class like pretending I was looking at 30. Hopefully the 30 can still show us things that still make sense, but now I'm pretty much on the fly with it. But disclaimer, I personally was in and out these trades using the 15-second, not the 30-second. I wanted to show you guys when we got to this exit, you know, what the 15 was doing, but the exit is the white line. I got out here, 15 shot. What is a 15 shot? I wish I could show y'all, man. I don't know what my chart's not showing it, but the 15, after we get to a target and we're right next to another one, we don't want to make a retracement and invalidate the opportunity to make a bearish fair value gap. And so that's why when price came up here, I said, up, cool. I know I wanted this yellow target, but if we wanted to get it, we would have got it right away. Right away. This is how you get out at the bottom. You cannot marry targets. You have to marry delivery. Stop marrying destinations, marry delivery. Believe me, being this close to a target, there was no reason to retrace back into the range. And on the 15, you'll see that we invalidated, I believe it was a bearish fair value gap here. We invalidated with a green candle. You don't see all that on the 30 because it's bigger, but there's no reason to invalidate that bearish fair value gap. So that's how I know to get out right away, because if we were truly bearish, we would have went straight there, or we would have used it and came down. So, you know, you got to use your imagination for now because of our difficulties here. But all I'm saying is, if you're this close to a target, there's no reason to be invalidating bearish PD arrays. You have to know how to pick good targets. You said I might be able to see the 15-second on continuation chart. Let me try it. It's just annoying because I mean, I annotated this with IJSP like exits and entries. So that's annoying. I ain't gonna fret, but maybe we can make it work. Let's see. Let me just make sure. So let's say we were over here somewhere and we went to the 15. Let's see if they give us that. Wow, that's crazy. So I do have it on this. I don't know why they're not showing me on the contract chart. That's so strange. That's never happened to me. That's so weird. All right. What do I do about that? I'm low-key lost. I don't know what to do about that. I have all these annotated. All right, we're gonna make it work. We're gonna make it work. So let's go back here. All right, so we got out the trade, and by the way, you guys can see where it's at. You see that? You see how they came all the way back up? That's how you get out at the bottom. That's literally how you get out at the bottom. You have to watch the sign. Don't ignore the signs, right? They came all the way back up to literally almost where I entered at. They would have took back all my gains if I was still holding this. So, and then even from a 30-second perspective, it already happened on the 15. I told you guys on the 15, you don't want to be invalidating bearish PD arrays, but look what happened on the 30. Look what happened on the 30. Bearish PD rate. That's a bearish fair value gap. We invalidated that. So those invalidations happen on the 15 before it happens on the 30-second, before it happens on the 1 minute, before it happens on the 5 minute. So why am I on those micro time frames during my entries and exits? Because I get the earliest signs of a change in price delivery. That's why I'm on those micro time frames. During the move itself, I don't necessarily need to be on those micro time frames. I'm more so focused on, hey, where's my higher time frame telling me we're going? I could watch the micro time frames during like certain PD arrays. So let's say I wanted to play this up move, and I peeped that, price dipped into this bullish fair value gap right here. Let me erase it. Price dipped into this bullish fair value gap. I might watch a micro time frame to see like, okay, are we holding this? I might watch it on the 15, make sure the 15 holds this because I want to see price hold that if we want to move higher as we did. That's something I might go to a micro for, but other than that, I'm really holding towards, hey, where is my higher time frame telling me we're going right now? For me, somebody said if we don't have the seconds chart, we could still see this on a 1 minute chart. Of course, everything I'm saying applies to every time frame. I'm just telling you guys how I can get out the earliest. So you peep where I got out, right? All right, if I was watching a 1 minute, and where I got out, by the way, is the white line. The white line. If I was watching a 1 minute, you'll be waiting for the invalidation of this fair value gap. See what I'm saying, y'all? So this is what I'm saying. I'm getting out down here because I'm looking at, I noticed the change on the 15-second first. A 1 minute person might notice a change all the way up here somewhere. But so I got another like 30 points out of the move more than a person who's watching the 1 minute. So that doesn't mean you're invalid to watch that time frame. It's just like, you gotta understand you're gonna be getting out later than the person who's watching the lowest time frame. But a disclaimer that I want everybody to hear me say right now is if you don't truly understand price delivery or know what to look for, you're gonna be on the 15-second at the wrong times. So there's still some background knowledge, but I can only teach you guys from my entries and exits and try to drop gems as much as I could. But I don't want, people gonna be looking in the wrong time periods. They're gonna be watching the 15-second like here literally for no reason. Like, why are you on the 15 right here? Like, what does that have to do with anything? And so you gotta still be careful with that. All right, so you see price comes back down, uses this 1 minute BTC that we actually created. It's also BPR. We push up. Cool. So I'm avoiding all of this because I was able to get out at the bottom. I'm avoiding all of that. Big retracement. Cool. So at this point, what am I thinking when I see this happen in the market? Because I told you I was expecting lower prices all the way to run all these yellow lines, all of this stuff. But I'm like, man, we're getting this retracement. And the week so far has looked like this. The week so far has been looking like this. So I'm like, oh, maybe we're gonna chop again. We've been looking just like this because we were still up here at this time period. So I'm like, oh, maybe it's just gonna chop again. So I'm literally cash, but I'm still watching order flow just in case. I'm still watching order flow. So let's go back to the 30. And let's see. 30 doesn't show too well why I got in here short, but maybe this is, I ain't gonna lie, this is pretty frustrating because I really wanted to teach y'all based on the 15-second here because that's really the reason I got in. It's not gonna be clear on the 30. You guys just see a bunch of red candles here, but if you were looking at the 15, there's more than just red candles. You just see some green in here as well. That's why there's wicks, and you get more of an explanation on why I'm getting in right here short. But obviously I'm looking for continuation. I'm looking for a lower low. I'm looking for the next yellow target and even lower. So one thing you could see outside of my entry, let's talk about holding it. Once we ran that yellow, this second yellow target, excuse me, which is all these yellow lines, right? I told you guys from the hourly chart, target those hourly lows, target those hourly lows, target those hourly lows. Why? Because this is the choppy move up. This is a form of liquidity. See these higher lows that price be making? All these higher lows become liquidity when we're bearish. So those become targets. So those higher lows become liquidity when we're bearish. So that's where my yellow lines have come from. So that's what I'm trading it based on. So let's go back to the 1 minute and you can see, all right, same thing. If we're bearish right now, we really want to hold this bearish PD array as we're right next to all these targets. Do you see what I'm saying? So we come and price, I went back to the 15 by accident. Let's see. Went back to the, see, it's like a habit. I went back to the 15. That's where I would have been at. I went back to 15. All right, so here we go. We on the 30-second. I'm about to go now. Yo, Alexis, you right. I'm going to the contract. I'm going to the continuous chart because I don't know what's wrong with my contract chart. We about to be over here right now. I'm gonna have to just figure out the annotations, or I might just have to move on from this. I'm not gonna front because I'm not gonna. I annotate it for a reason because how am I supposed to remember my entries and exits from something a whole week ago on a second time frame? That's gonna be tough. So I might just move on. Yeah, I ain't gonna lie. Unfortunately, guys. Um. I'll move on to a higher time frame bias. So let's erase all of this. Blame TradingView for this, people. Blame TradingView for this one. I'm so sorry. I wish I could give you guys more detail, but I can't right now. So, all right. So we get to this 4-hour unmitigated BISI. Why did the market bounce here versus going to a lower low? Understand that if you're looking at structurally, we're actually still in an uptrend here. Even though it's a disgusting looking uptrend, I want you to understand that structurally, we're actually still in an uptrend here. Like this is a price leg to the upside. I know you see price go sideways here, but sideways movement is still upward movement at the end of the day. We didn't pick a direction. So we're still moving to the upside. And then we have this choppy retracement, but it still exists between where? It still exists between this low and this high. Right? This high right here and this low right here. So ultimately, all this stuff is noise for real. And this retracement, we're still focused on bullish PD arrays and a discount. We want to see what they could do to price action. So when price comes here, we never use this fair value gap ever. Notice we never tapped into this from the 4-hour. So I wish I could have showed you guys like my exits, down here and stuff. All I have is like a few pictures for you guys. This is all in free community, but these are some of the plays I wanted to go over with y'all. Like this is my entry over here on that second play, and then also on the third play as well. This one went a lot lower and everything, but I couldn't show y'all that. So now we got to go to a higher time frame. So on a higher time frame, yes, this BISI is unmitigated. We never tapped into it. Notice that this BISI above it was already tapped into. That's why price didn't bottom out there. Y'all notice that? Y'all notice that price tapped into this and ran higher. So it already did its job for the market. It caused a higher high. It already did its job. So when price returns to it, this time when order flow is actually bearish now, technically we actually used it twice. So it's even weaker. Like it's even weaker. I didn't even realize that we actually used it twice here. So I definitely wasn't thinking we were going to bottom out right there. And obviously we did not. But this one below it was not touched. It was not touched. There's also a bullish OB right here. And so ultimately, why did the market bounce? Whether you're looking at it as a BISI right there in discount or you're looking at this as a bullish OB, all these things are reasons why the market ended up trading back to the upside to take these higher highs right there. All right. So if y'all were wondering, like, yo, why did the market not continue? That's one reason why we bounced. The other reason, why did I know we were not going to continue? Because this is something else I wanted to talk to you guys about. Because it's never in hindsight. If you guys remember, as soon as the market closed, at 4:03 p.m. in the Discord, at 4:03 p.m., I said, oh, that's not a good sign for continuation to the downside. And then that night in class, I'm telling all my mentees, yo, we're going to run these highs. Like, this is the next destination for price. We're going to run these highs. Why is that? It's for the same reason that I was telling you guys about continuation back when we were looking at the 15-second time frame at the very beginning when we had access to that. I don't know what happened to TradingView. Once again, apologies for the technical difficulties today. But this fair value gap was very, very, very important. This was the one right here. This was the one. If we were bearish, we 1,000,000,000% would have used this to go lower. Understand? So when this gets invalid, I said, oh, it's over. Once it's got invalidated, I said, I know exactly where we're going. We're going straight to these highs. So why was that high the target versus, I don't know, something over here? Like, why was it not going to make a lower high? Because people who trade market structure, you know what y'all saying? Market structure traders, who is not me, I don't trade market structure, traditional market structure. They're saying, yo, look, price did this. You put a low, a lower high, a lower low. And so they say, yo, we're bearish. And since we're bearish, what you expect to happen next is after a lower low comes what? A lower high and then a lower low. That stuff is, let me be respectful. That stuff is lacking some understanding. That's what I would say. The market doesn't move on higher highs and higher lows. That's not what it's predicated on. Oh, we made a lower low, so therefore, like we no, that's not how it works. It's more to the story and everything. So once again, this fair value gap is the reason why I knew that we were gonna run these highs. As that was the next destination. I said it like in the Discord. I said it. I'm on video. Everything is there all beforehand. We don't say this after the fact. We say this beforehand. Like I said, we're gonna run these highs before we ever run these lows, because at this point I know we're bullish, and so I'm trusting bullish PD rates. So let's keep that in mind. I'm trusting bullish PD rates, meaning anything that is bullish, such as a bullish fair value gap, a bullish order block, a bullish RB, a bullish MB, but whatever PD rate you like, they have a higher probability now because we have a bullish target. Why was this also a target? Because these were relatively equal highs. It's too clean. We don't like to leave these relatively equal highs in the market. It's way too clean. Same with these. This whole thing is a liquidity pool. There's a ton of orders here that are untouched. So there's a lot of people who went short, stop losses are above, never got stopped out. Went short, stop losses above, never got stopped out. Went short here, stop losses are above it, never got stopped out. And so that don't last too long. Just like these people. Let's look at it from the opposite direction. Look, right there. Stop loss slightly below, never got stopped out. Stop loss slightly below, never got stopped out. Stop loss slightly below right here, never got stopped out until we stop them out. You understand? So you have to watch order flow. This right here was signs of bullish order flow off the rip. This fair value gap was important, not the one above it. It was this one. This is the one that's most important, not the one above it. I knew we were bullish based on us not using that. And then when you look at this price leg here, tell me what the heck could stop price from going to those highs. There's no inefficiencies here. There's no fair value gaps here. There's no order block. There's no nothing. This is straight liquidity. Also, this is extremely healthy price action. Why is it healthy? Because both buyers and sellers have had a fair chance of taking advantage of this designated price area. So if you look at it from the perspective of buyers had a chance, sellers had a chance, it's already fair off of that alone. And we even stayed here even longer and ranged. So this is extremely healthy. And the nature of it as well, like I said, there's no fair value gaps in this overall area. So there's not even that type of inefficiency to stop price action. So like I said, it's extremely efficient. It's extremely healthy. So if we're going back into that range, the reason we're going back in that range is to target the highs that exist above that range. So I'm not looking for no lower high in here. That's why once this got invalidated, I already know, okay, we're making a higher high. And if we come to these highs, it just makes sense that we would go ahead and run these as well. And so that was the logic there. Now, so price starts its push overnight, of course. And on this day, what is this? Perfect. Right here, I wake up in the morning and I see this. So during class, the night before, I said we gonna run higher. I wake up, we ran higher. I'm like, okay, cool, that's good. So far it's playing out, analysis working out, beautiful. Now, why did I say, even though I know we're going to these highs next, I can see us retracing down all the way down to this fair value gap right here before going higher. Why did I say that? Why did I say that? You said I might just have to refresh the page. I probably do just have to refresh the page, but I'm gonna just move on for a minute, so good. So why did I like this fair value gap before going higher? Because when I'm looking at the movement, because yeah, like I don't want to just be calling stuff before it happened and not explain why I'm saying what I'm saying. So that's why it's important to come here on Sundays so we can talk about why it played out how it did. Because during the morning I can't explain all of this, but I could explain it to you out on Sunday's classes. So it's important to pull up. So this is why I picked this one for you guys to use this to go higher, because we don't move like this when we're really bullish. This ain't it. This ain't it. I keep telling y'all that, man. This is not real movement, bro. So this is a buildup of liquidity. When you look at it from lower time frames, you may start to see what I mean. Let's look at it from the 15. This ain't real. Consolidating every couple seconds, that's not real. It's not real movement. Even this dip down here, Let's study something else we talked about. Look at this fair value gap. Notice price used it, but what did I say real bullish sentiment is? Real bullish sentiment is not just using the fair value gap, it's tapping into it and shortly after making another one. So peep game how we tapped into it. Yes. Did we make another one after? No. All these things are very bad signs for continuation to the upside. And so yes, although I know we're going here next, it doesn't mean we can't retrace first. Doesn't mean it's going to do it all in one day. So that's why I said, all right, well, if we retrace, we could at least retrace where? To this inefficiency right here. Because at the end of the day, this is the choppy move, but this part is not. So if we're going to come down here, it's to bring efficiency to an inefficiency before going higher. It's to bring efficiency to an inefficiency before going high. That's why this was the spot that I had picked. All right, versus, and then this one, I didn't want this fair value gap to get traded back to. If we came back here, I would have anticipated a lower low. So there's also some understanding from this as well. That's a separate lesson as to why we don't want this one to get tapped into. But this one is okay. We can use this. So that is literally why this was the plan that I drew for you guys when it came to how much downside should we take. Take it right to here. After this, we go into yellow next, simply put. So that was the logic there. And then you see the market opens, comes in here, and then the rest literally was history after that. Like, literally was history after that. All right, and we ran straight to these targets. So you guys got logic so far as to, and once again, sorry that the class is not how I planned it personally, but I want to take a second to recap real quick so we could at least collectively gather the points that was discussed today, because I'm off my plan and I'm kind of just talking now. So let's recap for a quick second and make sure we all on the same page. Something we covered so far is why did we chop in this overall area for so long? I explained to you guys about the expectations about when we come into a valid discount PD array, a valid premium PD array. All right, you can see chop exist in that area, especially if neither of them deliver how they should. So for example, after tapping into this bearish OB right here, right, we should have made a lower low, but we didn't. We made a higher low. Cool. Maybe it's because we're actually bullish. Maybe I'm wrong. We're actually bullish. All right, well, we need to make a higher high. Did we? No. We zoom in for a second. No, we didn't make a lower low, and we did not make a higher high. Off the rip, you already know, it's about to chop right here. This overall area is about to be disgusting. We're in between sentiment. You set price alerts above these highs, below these lows. Understand? So when you want to know why we chopped it, that's why we chopped it. Now, cool. We have an expectation that we're going to go lower today. For certain reasons, one small reason has to do with the sweep of these highs. All right, so we going lower today. Cool. Where are we going lower on Wednesday morning? If we're going to start a bearish move, it's to take out all the buildup of liquidity that we built up all week. All these higher lows, they about to get targeted right now because you're not going to be safe in the market for that long. So that's how we came in and destroyed all of that in one shot. One shot, one kill was the deal. All right, what else did we talk about? Why do we bounce here on the 4 hour? This 4 hour BISI was never tapped into. And technically, we're still a part of a bullish price lag. So there's still a likelihood that we could use an unmitigated BISI because we're still a part of a bullish price lag. Right? So you have to watch price action here to see if you're getting reactions to the upside. And I'm sure, I wish I could have showed you guys on lower time frames, but there were things that showed us like, okay, it's ready to trade back to the upside now. And so now you're looking for targets on the upside. And what was the thing that we looked for? Well, after tapping into that unmitigated BISI, on the hourly chart, I showed y'all how we invalidated this bearish fair value gap right next to that probable area. This invalidation told me everything I needed to know. It's time we're going to make a move back to the upside and run out these highs. All right, now the next thing we talked about after that, since we have direction now, we back to the upside. That's our direction. What we said was, all right, we're going to retrace. But where do we retrace to? We retrace to this fair value gap right here because the movement above it was not real bullish movement. Even when you zoomed in on lower time frames, you could see that, you know, we tapping into fair value gaps and not making any shortly after. So it's like, okay, there's gonna be a big retracement, but where does that retracement stop? At the inefficiency from the hourly. All right, boom. So we moved to the upside, and really, you know, this was real easy. Like Friday morning was like super easy to tell. We about to blast off. So I know a lot of my mentees caught this one, and they were, my mentees killed this move. So shout out to y'all that executed on this. They were able to like destroy this, because there were also some other confluences as to why we were gonna make a strong move on Friday. So catching this whole rally was really nice. Now, why did we not continue? This is the last part that I wanted to cover on the recap from last week. Why do we not continue? Well, let's remember, yeah, y'all killed it. Mentee in the chat saying we killed that movie. I really did. Shout out y'all. And why we not continue? You got to remember that we're still dealing with this SIBI from July 17th that has a high probability to it. You know, so the expectation that we about to leave this range for real. I know you don't see my phone. Let me go back. If you're not familiar with TradingView, you could have like shapes and stuff on your chart on one time frame and then not show on the other. So understand that this whole time period, we're still existing inside of this daily bearish fair value gap from July 17th. We're still inside of it. Yeah. And so just know that I was when I go back to the hourly, you're not going to see the blue area, but we're still inside of it. So when we came to the high of that fair value gap, yeah, you better be looking for reactions. And there's a time element as well. So you should look at the time that we reacted to back to the downside as well, because there's relevancy to that time. So the whole retracement down, unfortunately, was literally when I was boarding my plane. And a funny story behind that is I literally went short. My fault. I literally went short on this trade, bro. And there was like last call for, you know, whatever my date was. I was like, bro, really? Because I really would call this whole downside, because this move was really predictable back to the downside. Now I can see that the movement wasn't that great, but I still would have caught generally around where the high of the day was. You know what I mean? Because this is so, like, this was like super simple. We were not gonna continue higher over this liquidity right here. We were not gonna continue higher. So then next thing you know, if I go to the 5 minute, y'all gonna see that we pretty much just dropped off after that for the rest of the day. It was a pretty nice move back to the downside for the rest of the day. And you know, we'll see what happens next. So I think we're still in this range. I know we gapped up so far on futures today. This is exactly where we at right now, I think. And we'll see what happens. But the little sweep that occurred was really powerful. Yeah, y'all was killing that move for sure, mentees. Shout out y'all. But yeah, that's last week. Tried to give you as much as I could with a watch list that I, you know, had to talk about on the fly. My fault, I couldn't do my actual plan. Where would a good spot be to enter on the way down? Got you right now. Good question, great question. Okay, so there's two places you could have tried this at. You could have tried it. Wait, actually, I could go to 15 here, right? I think so, right? Contract chart. I should be able to. They better not be annoying. Let's see. There we go. My bad. Let's talk about this with some low risk plays. Low risk plays. Low risk plays. All right. So there's room to go short here. And why is that? The reason is, if you notice, I told you guys, when we get to potential exit opportunities like that liquidity, that's where you start watching these lower time frames. You don't have to watch it on the way there necessarily, but when you get to your targets, that's when you start watching the nature of price action. So we get here, we come above the target, we come back into this BISI that's right next to the target. Cool. We use it, but we don't make another BISI after. What do we talk about bullish sentiment looks like? What's real bullish order flow? We want to make one shortly after. No, instead, we make this choppy, disgusting move. And the next thing you know, we start pushing down with a bearish fair value gap. That's opportunities to go short right here. And your stop loss would be based on price using this 15-second bearish fair value gap, because that's a potential opportunity to catch this sweep. So if you went short here, you could have gotten in on this fair value gap and held it for lower prices. It still didn't invalidate. Let me draw it. It still did not invalidate the fair value gap on that retracement. I'm not saying you have to hold it through this retracement, but if you didn't catch this move from, let's say, 680 down to like about a 25 point move, or this drop, that's fine. You could have let it come back above. Now, if we come back above, you want to see the same thing. Bullish sentiment. You want to see bullish sentiment above, but we're obviously not maintaining bullish sentiment as these bullish PD rays are starting to get invalidated. So based on the nature here, personally, I probably wouldn't enter this play until I see a real break of this range overall. Like that's how I trade it. Just because I'm not saying there's not room to like get in short and have your stop above here. My trade style personally, if it's not making the continuation move right now, I don't want to be a part of it. But I know people who, let's say they went short right here. They cool with holding all of this as long as it don't come back above the highs. I don't really do that personally. I want to catch the move when it's ready to move. So me, after seeing price not deliver initially lower, that doesn't mean I'm bullish all of a sudden. I'm definitely not bullish, but I would more so wait for price to start giving me a break of a range, because I would start identifying where the ranges are on all time frames. So for me, I know for a fact that we're gonna make a deep retracement after we invalidated this 5-minute BISI. So now I'm just gonna be watching order flow on lower time frames. After the invalidation of this, I'm like, okay, I'm watching order flow. So I'll have to go back to the 1 probably. And knowing me, I'll be getting in during this drop right around here. I'll be in somewhere around this area, and I would just take it to the downside. Because this movement ain't it. This choppy stuff, this ain't it. But I would try to take the continuation move, you know? And it's based on, once again, I'm watching the delivery regarding bullish PD rays. This 5-minute BISI should have sent us higher if we was bullish. It actually tried. If you see, it actually did at first. See, price came into it, went higher, but no real follow through, no continuation, come back in, used it again, but like lackluster. Boom, we invalidated it. Okay, bet. We're gonna make a deep retracement. I know that much, but when? You don't have to, just because you know where price is going doesn't mean it's a tradable move. And can I repeat that for a second so y'all don't miss that, because that's so important. Just because you know where price is going does not mean you have to trade it. Although based on this invalidation, based on the purple invalidation, I know we're gonna go lower. You can see that it took quite some time before it actually made that move, right? Facts. I'm waiting for the nature to become trendy. If the nature remains like this, I'm telling you right now, bro, if price went like this, the whole move down, it will have to go without me. So yes, it came down to where I wanted it to go, right? It came down to that. My bad. It came down to this area. Yes, cool. But if it moved in that manner, I don't want parts of it. I'm not trading that. I'm gonna wait for price to get trendy. So I'm watching order flow across time frames to make sure that we're trending. Do you see the difference between this movement on the left side compared to the movement over here? It's so much cleaner. These are the moves I catch. Hence why when you guys see the things that I put in the chat and stuff like that, it's generally gonna be, I don't know, my thing not functioning. There we go. All right, whatever. It's generally gonna be moves when we're actually like dropping one directionally. It's not a coincidence. Trendy equals printy. Facts. That's not a coincidence, y'all. Like all the trades I take are generally like when price ready to move. Look at the first play today that I wanted to explain to y'all with the 15-second. Remember how I had set price alerts outside of that 15-second range? It ranged there literally, y'all, for 33 minutes. I avoided all the chop. 33 straight minutes. It just stayed in a tight range. I set price as soon as it broke that range. I used the setup that I taught y'all last week for a break of consolidation. I used that setup to go short right here, and boom, you know, got a good amount of points out of this move. I mean, that's one contract right there. That I'll take that move all day long, especially in a consolidation time period. I'll take that. So my moves are going to generally be when prices like this, not when prices like this. So one, I'm sorry, like for repeating it, but I just want to make sure you understand it. Like I really want to make sure you understand it. There were opportunities that I personally would have taken right in here based on price using this busy, no follow through, cool. This drop off, I would take short opportunities here and go, okay, we didn't get much continuation after this. Fine. I'm still gonna make money. I still took profits. It just didn't go as low as I wanted it to. It comes into that 5-minute busy we talked about. I still made money. Maybe I even played the upside move, but I don't know about that. But anyways, there's still room to make money on the busy reaction, but there's no real follow through above these highs. So let's draw this one. I'll do it a different color. Let's go white. No real follow through above these highs. See, no real follow through. So we watching these time frames and this overall vicinity. You see the movement is weird about these highs. That's not how we take highs in the market. I'm telling y'all, delivery is everything. That's not how we take highs in the market. So if we're gonna make a higher high right now, it shouldn't do this. It shouldn't do that, y'all. Like all of this ain't it. Like this is not it. So the whole price action is suspect, and it's giving you a bunch of signs that yeah, we're gonna end up trading back to the downside. But when? The when is the tough part. The when is where you could blow accounts. You need to just watch order flow. Watch order flow. Wait for price to get energetic in one direction. Watch the important time periods in the market. There's certain times when you expect price to make a move. Certain times. This is a time-based algorithm. It's not randomly. We all of a sudden start trending at this time randomly. No, there's relevance to the times that we trend. All right, there's relevance to the times that we trend. It's funny because mentees, y'all may notice, I'm just had a mentees look for real. Look when this down move started, mentees. Y'all see it? Look when this down move started. That's not a coincidence. That, mentees, let me know if the time at the bottom of the screen, is that not something that we talk about? The market trending at this time right now. Like, y'all can see that in the chat. Do we not talk about this time right now that's on the screen? Why do we make this down move at that exact time? That's a every day. That's a mentorship topic. That's a topic. It's not a coincidence that that's when we left this choppy area. We made this huge down move at that exact time, bro. That's what I say. Where it's like there's always setup. It's a time-based algorithm, so you don't have to force the trade. Yes, you know directionally where it's going, but when is it going? There's science to it. There's a science to it. Yeah, that is one of my favorite tools as well. And shout out to mentees in the chat confirming. There's a bunch of mentees in here confirming. So yeah, hopefully that helps when it comes to entry. So yes, you may know direction, but you don't want to get caught up playing chop before it actually makes that move. You still gotta trade the trend. Still gotta trade the trendy move. Now, as far as the uptrend that we started this week with so far, I don't think it's gonna actually. Let me back up. I'm gonna start over. So that's the first half of class. Let's get to the second half of class. It might not take as long. Don't get me wrong, but I mean that's last week type vibes. Let's talk about this week. I'm gonna try to fly through this. All right. So we always start with the weather report here. So this week is major, man. Let me take a sip of water before we talk about this part. I hope y'all still getting value out of today's class. It's not going as I wanted it to, I'm not gonna lie, but I hope y'all still getting value from today's class, real talk. So let's take it to the next part. Let's take it to the next part, man. That weather report. Why I call this a weather report? Because price is not gonna move until it's time to move. So you want to know the best times to take trades. Monday is no news scheduled, so be careful trading Monday's price action. We're still inside of that overall range as of this second right here. And on top of that, there's no news. So the expectation that price is going to make an aggressive move is like based on what catalyst. Understand? All right, same thing with Tuesday. Not really talk about too much. Consumer confidence is not that bad, but like, Now Wednesday, I think we can start seeing some more aggressive moves. You got GDP here at 8:30. GDP here at 8:30. That's a market mover. ADP employment is okay. PCE is Thursday. I ain't gonna lie, y'all. I just noticed that. This week is crazy. What the heck? I didn't know PCE was Thursday as well. I did not see that when I looked before. That's crazy, bro. because I was about to talk about NFP, which is non-farm payroll, which is which is also known as the employment numbers. We're checking out the labor market when it comes to America. So how we got unemployment, PCE, and GDP in the same week. It's gonna be an eventful week. I'm gonna say that right now. And then the following Tuesday is election day. So I ain't gonna lie, price action is about to get real fun starting this week. It's been real boring the past over a month now. It's been chopping, but it's about to get real fun. Oh yeah, and it's a huge earnings week as well. Yes, very true. Thank you, my mentees today in the chat. Yeah, it's a huge earnings week. Huge earnings week. So buckle up, y'all. So let's talk expectations, man. Oh my gosh, I'm excited for this week, man. All right, let's get it. So let me go to QZ. See, I had all my stuff annotated for y'all. All this stuff is over with. Gotta delete all this, man. All this stuff. Voice busy low. It's annoying. Well, let's talk about something I did want to point out that I forgot to say earlier though was the low of a fair value gap is a target in itself. So when I was playing downside here, obviously I didn't get to talk about it in detail. As we traded past the halfway mark of it, I'm following order flow in the lower time frame, of course. Don't get caught holding a bag, but as order flow is still bearish, and this is a target, the low of a fair value gap. Because why? It's a gap. Yeah, I ever targeted the low of a regular gap? Okay, yeah, you do the same thing with fair value gaps. So that's, when the market came here, this was my exit on the downside around this area. My final exit, like I had because I was still like scalping into these lows basically. But anyways, okay, we talked about all that. All right, so CB high, weekly highs, all of that we already talked about. Boom. Don't need this no more. We ready to talk about next week now. Last week is over with. So that's cleaned up. Let's take it to the dollar now. Let's go DXY. All right, y'all. So DXY, I was wrong and right about DXY at the same time. So as I told you guys, I'm overall bullish on DXY. I've been bullish on DXY since down here. Right, this is all on recordings. Watch previous weeks. We've been bullish on DXY since down here, and we were targeting this area right here as a minor target, but we really wanted it to move higher. All right, so last week, after seeing Friday was a red candle after touching our target, I was like, okay, it might be time for a retracement, but it's just to go higher again. That was last week's instruction. Be like, hey, it's tough to call it retracement, but I said this is a potential retraceable area before we end up going higher. That thing didn't even want to retrace. DXY just kept pushing. It's been extremely strong. This is just one of those moves where it's just a straight line move. There's no retracements going on. We just pushing. And so, I mean, we're 100% correct on the bullish side. Like, yes, we're bullish. When is the retracement? I mean, that's what we call spooling. What is spooling? Something I did warn you guys about, at least I know I said this, was there's still a daily fair value gap right here. We want to see if price can respect. And guess what? Price super respected it, did it not? Super respected it. All right, it goes up, it goes up, it goes up. And then next thing you know, what happens again? We make another daily bullish fair value gap. Did price respect this one? Yes, it did. But Rel, you see it wicked under it. I know. If you're new here, we always talk about how with fair value gaps, we're looking for the bodies to hold the area, not the wicks. So as long as the bodies held the area, it's valid. So you can see that body's held this fair value gap right here. And we continue pushing higher. That's the definition of spooling, when you're using the nearest PD raise to you to continue a move. So it's spooling to the upside on a daily chart. And so, you ride that trend until it's not spooling anymore. And then you look for the retraceable spots. So that's how you trade spooling, basically. We'll continue to respect the nearest PD raise until we don't. When we don't, we find the next retraceable spot. And there's a science to it, a science that I actually came up with on my own, by the way. So a lot of people, might do smart money and stuff. I understand that despite what you may learn online and everything, I also have my own discoveries, plenty of them. Actually, one of the biggest concepts of my mentorship is a concept that is strictly a back to a real concept. Never learned it online from anybody. And so we learn where price should retrace to, et cetera, et cetera. All prices, objectives, and destinations. That's all from my brain from just being obsessive about these charts. And so after price is spooling, there is a very specific spot we tend to go to. It's very accurate. And but right now we're spooling, so we're gonna keep riding this trend to the upside for now. Yeah, and so with that being said, yeah, I just realized I never went over Forex when I did this on Friday, so we on the fly with Forex. Where would you take entry when spooling for? So the question in the chat is, where would you take entry when spooling? Well, if I notice that price is spooling, I'm going to continue to draw out. I'm going to continue to draw out the nearest PD arrays on that time frame. It's spooling on the daily, so I'm going to draw the daily PD array, and I'm going to watch the time frames that I use. I'm going to watch the time frame that I use to confirm a daily POI. So if you remember, with a daily POI, we like to watch the hourly. If the daily POI is valid, the hourly is expected to form bullish fair value gaps, and those bullish fair value gaps will either not get traded back to or be respected. So if you notice right here, we tapped into it, and then the hourly shortly after made what? A bullish fair value gap. The price uses to go higher? Absolutely. Look, this hourly fair value gap didn't even get traded back to. This one did, and it got what? Used. And price continued much, much higher. So that's how you would trade out of a spooling PD array. You're just still using your confirmation time frames to tell you that, oh yeah, we spooling. So let me reiterate that in case somebody missed it. So notice the daily chart, and I didn't even look at that until now, but you see, like, this is a question that just came on the fly, but this is how I would do it. Okay, we're spooling on the daily, so I need to continue to watch daily PD arrays. So I would draw the purple area. That's my daily PD array. All right, that is the purple area that I'm drawing. So let's put a quick circle there. This is when it tapped into it, right there. So then notice that the hourly now, when we touched it for the first time, was right here. We just touched it for the first time. I'm watching the hourly to see hourly bullish fair value gaps come out of that area. All right, there's a small hourly bullish fair value gap right there. Right there, that never got traded back to. That's interesting. I like that. Cool. We made another one. Price trades back into it, and we respected. Look how price respected the upper half of it too. Sensitivity. After touching it, we made a small one right here, 1 fair value gap. We made a bigger one right here, 2 fair value gaps. And we made a third one, 3 fair value. We made 3 fair value gaps after touching this. I think it's safe to say we bullish, right? So, there's entry opportunities in here, of course, or on the reaction, taking a continuation move out of the fair value gap. Those are the entry opportunities. And the question in the chat says, so after the hourly, next lower time frame. Cool. Purple area is the hourly. Oh, my fault. Purple area is the hourly. Purple area is the hourly. Same thing with the 5 minute. So 5 minute is the time frame that we use to confirm an hourly POI. We're looking for 5 minute bullish fair value gaps. We didn't get any 5 minute bullish fair value gaps until right in this area. All right, so you may want to take a continuation move through these hourly highs that we just put in, or no, not those. Maybe these. I would have to go back to the hourly to check, but either way, you're looking for the same thing. You're looking for 5 minute 5 minute bullish fair value gaps. So where were our 5 minute bullish fair value gaps? They started occurring right in this general area. Same vibes, man. Same vibe. You're just taking continuation moves. This should be respected, even if we traded back into it, which we did not. But even if we traded back into it, it should be respected to go higher. If you notice, these 3 red candles is also a bullish order block. So you had this protecting you as well. So if we would have come down in here, this bullish OB, likely would have reacted right there and been taken back to the upside. And you're just following the trend. So notice that even though there's an hourly POY there, you're going to use the 5-minute as your confirmation time frame. And you may ask, oh, well, when we get to the 5-minute POY, what's our entry time frame? The 30-second. So you're going to look for the 30-second to start making 30-second bullish for value. So you can see how you can enter the move. Even though it started with a daily analysis, you find your way down to a 30-second entry. That's an example of how you can take advantage of that. All right. And guess what? You still have a daily target. Even if your daily target is the previous daily highs. So spooling entry, your target becomes this yellow line, the previous daily highs. So whether you took it from the hourly down there to right there, that's valid. All of this valid plate from the hourly here to right there. You could have took it from that 5-minute entry we talked about. You could have took it to what a daily target. Daily analysis. We scaled all the way down to a 30-second entry, took it out at a daily target. That's how this works. All right. That's how we get bigger profits with small entries, small risk. Because if I took, let's say, inside of that 5-minute bullish fair value gap right here, see, if I would have took a 30-second entry, that means I have a stop loss based on the 30-second or maybe the 5-minute. Depends how you want to trade it. So if you base it around this 5-minute fair value gap, your stop loss, look how small your stop loss is, but look where your target is at, the yellow line. Stop loss based on this, target is a yellow. That's how we always gonna win way bigger than we lose. That's how we trade. How did I know that the price was going to the yellow line? How did I know price was going to the yellow line? Let's not forget where we got the yellow line from. It's the previous highs that were put in. If we're spooling, the spooling bullish fair value gap should take you to the previous highs. That's the point of spooling. You're supposed to make a new high, right? So you know where price is going. All the time frames are building up to get you back to that daily target. That's how this works. Exactly. All right. So that's that. Hopefully that helped. Good questions. Let's keep it moving. So I was actually I was actually when I was actually on vacation still when I made this watch list. I really forgot to go with Forex. So I almost don't want to go with Forex because I didn't get to look at the chart. So I might have to skip that. I'm sorry, Forex traders, because I didn't actually get to go with Forex. Like, it literally just hit me. So my bad, y'all. It looks like it didn't do much last week though. It just consolidated, but we'll have to skip that. And we're gonna go right back to NASDAQ. All right, so back to the NAS. Let's really talk about it. Let's really talk about it. So price has been holding this fair value gap for the longest. Why do I like that fair value gap? I talked about this literally for months now at this point. Why do we like this fair value gap to potentially send NASDAQ back to the downside? Because this was technically a higher low right here. So this down move to me did not complete its bearish objective. And then we have this really choppy move up. Yeah, it's very hard for me to believe in this move up. I feel like it's just a movement back into a premium before coming back to a lower low. Now that's really a bold play to predict. I know it's asking for a lot, but I see it happen on lower time frames every single day. So that's something I'm looking for in the daily. If we start coming above this fair value gap aggressively, then I think we're gonna make an all-time high first. So if we invalidate the bearish value gap on the daily chart, we may come above this high first, but then I think shortly after, especially if it's a staggered move, we're gonna have a really hard drop in the market back to the downside. That's something I would anticipate right there. So the initial analysis that we've had for months now, literally, I'm still looking for rejections out of this to move lower. But if we invalidate the blue, we should make an all-time high first before potentially coming back down. And why am I thinking we're gonna come back down? Because I'll be very surprised if everybody who has stop losses right here, everybody who has stop losses right here, everybody who has stop losses right here, if they just remain protected, like they never got stopped out. I showed y'all a million examples on all time frames so far that does not last too long, where you just stay protected in the market, no fair value gaps in your movement, and you're just making a stagger move to the upside. That just does not last. It doesn't last. So this is the first time, not the first time, but if this is one of those really minority times where I see it continue off of movement like this, I'll live with that. I'll live with that. I'm gonna make money regardless because I know how to adjust. But that's definitely my expectations, and I'm standing on that. Like, notice I'm not waiting for price to go super bearish before I start talking about it. I've been telling y'all about my expectations on this literally since August 25th. Go back to the recording. And so, although we continue to stagger our way up, it's really weird movement. We literally have not had a fair value gap since September 12th. September 12th, y'all. It's October 27th right now. We have not made a fair value gap on the daily chart since September 12th. That's unheard of. This movement is very weird. It's very staggered. It's very slow. We're not really going nowhere. Something big is going to happen. And my initial analysis is that it's going to be a big move to the downside. And if it does go up first, it won't last long. If it does go up first, it won't last long. And when we come down to this fair value gap right here, I expect it to get traded through. Even if it bounces at first, I expect it to get traded through. All right. Because a higher time frame, like the weekly, the monthly, they're telling me we should go lower. So this daily fair value gap here, being that I believe the objective is to come under these lows, if the objective is to come under these lows, this daily fair value gap is just a road bump. It's just a little speed bump. It's just a little speed bump. I ain't tripping about that. Ain't worried about that. Understand me? So where that's NQ. All I want to say about NQ, I said it was something else. Let me just make sure. Let me just make sure there's nothing else on NQ, right? That's really it. That's that. Oh, I think I wanted to say, like, right now, like I said, so far, when the market opened so far, we've had an up move to start the day. I don't think it's going to last long. I think we're going to end up coming back down. I said that at the beginning of the Zoom as well. I don't think this up move is going to last. If it does end up making a higher high than what we made on Friday, so be it. Like, if it does, my analysis still stays the same. So whatever, but I do think that the move to the upside just now was not really going to last too long. I think we're going to end up making a move back to the downside. All right, so back to ES. ES is really the same analysis. It's consolidating right now. Yeah, I can see there's no fair value gaps here as well since, for them, September 12th, actually, yeah. So both ES and NASDAQ have not made a fair value gap on the daily since September 12th. You can see the movement. I don't believe in movement like this. If you still believe in movement like this after me showing you a million examples, I mean, do your thing. I'll show you 1,000 examples on all time frames at this point. So good luck. Now, this daily VI on the Dow Jones, the YM, the Dow Jones, I don't want price to come back into this. I don't want price to come back in here. I want price to remain under it and lower. So this fair value gap from Wednesday, October 23rd, a bearish fair value gap. I want this to continue to hold price to the downside. Then we'll look for lower. This is a short-term target for me. Short-term target is daily BISI. All right, short-term target. But I expect lower prices than that, but just a short-term target would be this daily BISI. But we'll see. We'll see. We want ES, NQ, and YM, meaning we want the S&P 500, the NASDAQ, and the Dow Jones. We want them all to be moving in the same direction. We don't want them moving in opposite directions. Whenever that's happening and they're all moving in different directions, you're dealing with a consolidation type market, and it's best to stay cash. Those are very low probability conditions. When they're moving in the same direction, you know you're dealing with a market that's not being manipulated to hold price in a range. So yeah, the bearish delivery I would want to see on the Dow Jones, like I said, would be not to come back to that VI, but more so to stay somewhere under the purple box, somewhere under here, as long as we and start trading down to this minimum. The Russell, yeah. So I don't look at the Russell when it comes to those three. So notice how I said I want ES. I want the S&P, the NASDAQ, and the Dow Jones to move in the same direction. The Russell, I'm not necessarily looking for it to move in the same direction as them, but you know, ideally I like when they all do, but I don't look for the Russell, no. This is the Russell right here, though. This is a chart for them. Many moons ago, you guys may remember, we called this as a target for the Russell, and low-key, this has really remained as the high largely. They went a little bit above it, but this has remained as a high. We pretty much just staying under here, and my next destination for the Russell, I'm looking for it to come to September's lows. I want it to come to September's lows next, right? So I'm looking for bearish PD arrays to hold to take us into September's lows on the daily chart. So I would watch bearish PD arrays on the daily chart and expect them to work into September's lows when it comes to the Russ. The Nikkei. Nikkei is the exact same analysis as the NASDAQ for me. And so they had this premium fair value gap that I've been looking for to work. I've been talking about this since August as well. What you call it? I mean, it continues to hold. Like this, just like the NASDAQ, it touched that first, came back to it, but it's been rejected and it's doing what it's supposed to do. It's just overall, you can see the movement here too is not favorable. It's just choppy on both sides, nothing really to be excited about. So I think, like I said, the market is just waiting on some bigger news. This week we have PCE, GDP, and NFP. Those are three major events all in 1 week. And then on Tuesday, the following Tuesday is election day. So you know that some big movements will be happening in the market. So it's important to know direction beforehand. So you know where you expect the market to go ahead of time. Right. I would say stay away from CL. I've been saying that for a little while now. It's in seek and destroy conditions, which means that it's in choppy conditions. You want it to break this range because on the higher time frames, all the higher time frames are choppy in both directions. And so you know, I'm kind of looking for that. I mean, excuse me, I'm not looking for anything on here when the market is in this state. This is all stuff that could blow your account up. So be careful trading that. Gold. All right, so man, we've been sniping gold in a crazy way. We've been sniping gold in a crazy way. Here, literally starting from this reaction to the daily bullish OB, calling retracing back to here, calling retracing back to here, calling retracing into this right here. So we're gonna go high. Like literally every single movement up and down, we've been vocal about it. Before it happens, not after it happens, before it happens. And so here we go. What's the next move for gold? I would avoid conditions in here for the same stuff I told you about before. All right, if we were to lower, we should have remained under these lows and we should have continued down. All right, cool. Maybe it was a sweep bet. So we should go flash to the upside right now. Nope. We came back to down and we didn't make a lower low again. So you know what exist here. What could exist here? Chop. So I would be careful with trading gold in this overall area. This is also after an objective has been met, by the way. What do I mean by that? Well, I talked to my mentees about this, how we can find targets at all-time highs. So if you notice, gold is indeed at an all-time high. It's never been as high before. So one target that we had at all-time highs was this yellow line. And coincidentally, of course, we're consolidating right around there. The second target is above it. So if we break the range to the upside, I would expect gold to hit 2798.6. All right, if we break to the upside, that's what I want gold to hit. If it breaks to the downside, then I think gold can make a really nice move to the downside. But if it breaks to the downside, just understand that it would have to invalidate this purple area. I would like to see it invalidate that, and I want fair value gaps to be in the mix. And if we see that, then gold's gonna move pretty aggressively back to the downside. All right, so I would avoid this price action. Where are my price alerts? My price alerts on gold would end up being same thing. I would look at the halfway market as long wick, and I would look at probably just like right before those lows. And why do I say right before? Because I want to look at, before I take a trade, I want to look at the order flow entering to the price alert. So if my price alert is, I'm gonna put a white line there, all right? If my price alert is like right here, all right? On the way into that line, I want to make sure that I'm watching like bearish value guys be made, respected, another one made. I want to see all of that headed into it, so I know, okay, we bearish right now. So when we run this low, I'm expecting bearish PD rates to continue to work. And if all of a sudden we run that low and then we start invalidating bearish PD rays, I know it was just a sweep. And so I know, like, okay, bet. My stop loss is based on that PD array. It didn't work. Cool. We back into the range. I don't want to trade the range. You know, so my risk is all dependent on what we do around these lows for real. If it works, then of course you end up continuing to the downside and you target the moves that exist under here, and it's gonna be a nice move because we don't consolidate for no reason. We consolidate because we're getting ready for a big move. But where do you blow your account? Typically inside of the consolidation. So as I said, I would stay away from the inside of this on gold personally. That's how I trade that. You know, about to finish up here. I don't think there's anything new that on spot that I didn't already say. Same thing with QQQ. They've all been in the same spot for quite a long time right now. The only thing about QQQ is, and that keeps me somewhat semi-bullish on NASDAQ, is being this close to the highs. I wouldn't be surprised to see a sweep of those highs. That could happen. But I don't know. I don't. It's tough to say. I would just watch this closely. More so, I really watch the Nasdaq, because even when I trade options, I have a futures chart up. And I've said this many times in the past, but just in case people would have missed that, why do I have a futures chart up? Because at the end of the day, I get my targets. See if we can use last week as an example from that. Where's last week's hourly at? This thing, right? Okay. Is that 10 a.m. 5? All right, let's talk about this. For example, let's go here. Why, as an options trader, do you want to have a futures chart up with real-time data? Make sure it's real-time data. TradingView, if you don't pay for data on TradingView, you have a 10-minute lag. Don't get caught up. So make sure y'all hear me. If you pay for data, which should be just a few dollars a month, then I would always watch a futures chart and take trades on QQQ with my phone if I'm an options trader, because I get more targets on a futures chart. For example, these lows right here, these lows formed at 7 a.m. These lows right here formed at 8 p.m. So look at the lows of this drop. It formed at 8 p.m. Yes, we took it during New York session. So QQQ people were riding this drop, but they didn't have a direct target like I did. I knew exactly, oh, price is going to keep going lower because it has to come to these lows minimum. So some people on QQQ might have took profits right here because this is like a 9 a.m. candle. They might have saw this on their chart because their chart goes from 9:30 to 4. But somebody who's watching the futures chart, they know, yo, we're going to target these lows as well. And we're going to target these lows on the left as well, you know? And look, this is midnight. Options people don't see this. These lows are also a target. That's how we went there. Where are these at? Okay, this is New York. So QQQ people might have seen this because this is New York session. But hopefully you catch my drift to where I get more information about what price could be targeting. And so it helps me hold my trades longer because I'm watching the futures chart. Even before I traded futures, I was watching futures charts. I think option charts are foolish to trade on based on the fact that we both see the information. We're both looking at the NASDAQ. You just only have information from 9:30 to 4. I have information from overnight. I got everything, and I got 9:30 to 4. I got all of that at the same time. You know, y'all just got one of these targets. I have more targets than you because I have a futures chart. All right, so we're gonna take the same chart. I'm in puts. You don't know where to get out at. I know where to get out at because I know what price is targeting. You know, so no matter what, everybody should be looking at the futures chart. That's my personal recommendation. I don't even know why you would still be on the options chart. I literally have no clue. I don't see the benefit at all. But yeah, that being said, you know, I wish I could have done more. Sorry for the way the Watchlist went. Is definitely not happy with it, but I hope y'all still got value from it. A lot of technical difficulties. I was on vacation. I forgot to go over the Forex charts. Like, that stuff is very much unlike me. So I apologize for that. But it's all good. We in here every week. So we all know next week gonna be fire. I guarantee you that. So I would definitely pull up next week. If you watch this on YouTube, subscribe to the channel, like this video, check the links in the description because I got a free community link in there, the full mentorship, 30 classes, homeworks, tests, quizzes, curriculum style college. It's a fire mentorship. It's changed a lot of lives. That's in the description as well. We got some prop firm links in the description if you want discounts as well. So definitely check all that out in my description box. So with that being said, man, watching this on YouTube, that's all she wrote, and I'm holla at y'all.